that has worked for PwC Cambodia for more than 10 years. I was living in Cambodia since 2009. As I remember, Phnom Penh, the capital city of Cambodia, has only a few high-rise buildings at that time. So in the past 12 years, I experienced the economy growth and significant change with Cambodia in terms of its increments of foreign investment. So I will share my local tax experience and the importance of tax planning before your investment or company set up in Cambodia. I also have a team member, Ingrid from PwC Hong Kong. She is helping me on putting the slides on the screen and also as a joint speaker in this session. So Ingrid. Okay, maybe yeah, I have a little bit introduced on her. She is the senior manager of PwC Hong Kong, and then she will be responsible for some sessions that after. Okay, my sessions will introduce the general tax environment for the considerations of setting up a construction company in Cambodia and share some major tax issue for constructions. In Cambodia, tax system is a self-declarations regime, meaning that taxpayers are required to calculate their tax and submit tax return, which will be subject to future tax audit later. The taxpayers are self-categorized into small, medium, large taxpayer, depends on their legal forms and annual turnover. Generally, construction company, real estate, property management and land holding companies should fall under the medium or large taxpayer based on their annual turnover and asset value. Then you will need to consider which forms of legal entities for your investment in Cambodia. For construction industry and other income generating activities, foreign investor may choose in between setting up a branch or a limited liability company. Both branch and limited liability company are owned by the parent company, but are in different way. One main difference is that the branch office cannot entitle to any qualified investment project, the QIP tax incentive. To be qualified for a QIP incentive, you must have a company incorporated in Cambodia. While the limited liability company is the most common business forms in Cambodia, it can be owned 100% by foreigners, and you could have up to 30 shareholder. So meaning that you could set up a single member private limited company or set up as a joint venture. And it is the only legal forms that you could hold or own land. But as previous speakers mentioned, that the land ownership restrictions apply, which you should have at least 51% of the shares held by the Cambodian national. But in general, it is more flexible to set up a limited liability company for any business expansions or restructure in the future. So as I mentioned earlier that in order to qualify for the QIP incentive, you must incorporate in a form of company, but only construction service isn't enough for applying QIP incentive. Then you will need to go back and check the negative list on the law and investment, but it has already covered by our previous speaker, Mrs. Lin Rata, and also Sonsipal from CDC also talk about that QIP tax incentive, that about the tax exemption and others. So I'm not covering in these sections again. And then let's move on to the company registration process then. Okay, once you decide which legal forms that you choose to enter in Cambodia, you will need to go through the registration process. If you are entitled to QIP incentive, then you could register a company through CDC. They're providing the one-stop registration service. If not, then either setting up a branch or limited liability company, you are required to register with the Ministry of Commerce, the General Department of Taxation, and the Ministry of Labor. Generally, the registration are quite straightforward and easy, that you could be done online through the CamDX system. For construction company, that bear in mind that taxpayer also required to obtain the engineer and construction license from the Ministry of Land. Then we move on to the taxations. After you register a company, taxpayer are required to file monthly tax and pay tax to the GDT by that line. Recently, GDT introduced the e-filing for monthly tax return online submissions. The deadline for tax payment is on the 20th of every month, but the online submissions of the return is on the 25th. So since there is no specific tax regulation for construction and real estate company, the general tax law will apply. So now we're going through that relevant monthly taxes, including the prepayments of tax on profits. It is calculated on 1% on your monthly turnover, inclusive of all taxes, but exclude VAT. Turnover meaning that the income of your primary activities and also subsidiary income. It is a tax that generally understood as an advance payment for income tax. You pay monthly, which will be offset with the annual tax on profits at the other monthly tax is the withholding tax. It is the payer's responsibility to withhold and pay. It is due when the expenses is paid or recorded in the accounting records. For example, you accrue $1,000 of rental expense on your accounting system in August. Such expense is not supported by a valid tax invoice. Then you will need to declare and pay 10% withholding tax, which is $100 by the 20th of September to the tax authority. So this tax is actually collected on a rationale that the recipients are not subject to corporate income tax. So tax authority with placing the responsibilities on payers to collect tax. The payments to resident taxpayers, including rental, services, interest, and royalty payments are subject to withholding tax from 10% to 15%. But if you have made payments with any Cambodian source of income to a non-resident, let's say a company in Hong Kong, then you must have to withhold 14% withholding tax on the amount. The Cambodian source of income may include, but not limited to, interest payment, dividend payment, management and technical fee, as well as the services, as well as the income from service provided in Cambodia. Since the scope of withholding tax imposed on the payment to a non-resident taxpayer is quite broad, so we usually recommend clients have a separate consultations and a contract review before confirming the significant transactions. Then the next one is value-added tax. VAT is charging 10% on all taxable supply. For example, construction services, engineering and design service, as well as selling on condos are all taxable supply. That's 10% VAT should apply. But VAT is not applied on selling land. The VAT you charge on customer is named output VAT. The amount you pay on purchased goods and services is input VAT credit. So they offset with each other on a monthly basis. But bear in mind that to claim the input VAT credit, you must obtain the valid VAT invoice issued by the supplier. And it has to satisfy all the criteria required by the tax law. So we recommend that taxpayer should perform a careful checking on each supplier invoice before accepting. And then the last one is the tax on salary. Employee is not required to file personal income tax return or pay tax directly to the tax authority, but instead the employer must withhold and then pay the tax on salary to the GDT on behalf. So the term salary is broadly defined to include remunerations, wages, bonus, and overtime, etc. to determine the tax rate, you have to identify the employee's residency status. Generally, foreign employee expatriates who have visited or stayed in Cambodia for less than 182 days in any 12 months period are considered as non-resident taxpayer. So non-resident taxpayer is taxed at a flat rate of 20% of their Cambodian income only. So meaning that their income earning from employment in Cambodia. But as a resident employee is subject to tax on salary on the worldwide source of income at a progressive tax rate from 0% to 20%. Then the tax on fringe benefit is a tax that on any fringe benefit you provided to staff in cash or in kind, directly or indirectly, are also taxable at a flat rate of 20% of its market value. For example, the private use of cars, meals and accommodations, education fees for the employee kids, and even low interest rate loan are taxable. Okay, let's move on to the annual tax sections, which we focus on the tax on profits, minimum tax, and others. That's tax return must be filed and paid within 3 months of the tax year end by every year's 31st of March. The standard tax on profit rate is 20%, while minimum tax is also imposed at a rate of 1% annual turnover. Minimum tax is calculated for comparison purpose. If the taxpayer is in a tax loss position, then 1% minimum tax should be paid. And other taxes relating to construction and real estate company is called immovable property tax. It is borne by the owners of the immovable properties, including land, house, buildings, and other construction built on land. It is a tax rate at 0.1% on the property with the value over 25K US dollar. Then in addition, the land without constructions or with the construction but not in use is also subject to the tax on unused land. The tax is calculated at 2% on the market value of the land per square meter. But if the land already paid the tax on immovable property, then tax on unused land will not be applied again. At the time you sell the property, 4% stamp tax is also imposed on the title transfer, including land, building, and vehicles. It would be the buyer's obligation to pay the tax, but generally it's negotiable on the contracts who would be bear that cost. Okay, so other than tax obligation, companies should also be aware of the other labor obligations that we have seen some construction company didn't obtain work permits and business visa for their expatriate worker in the past. So under the labor law, if you fail to comply with this work permits and business registration requirement, that you could result in a fines and in a serious consequences that being put in jail up to 3 months and also deportations of employees. After knowing all that tax rate and cost of investing in Cambodia, so you may think that the total tax rate is too high, that makes your investment in Cambodia too expensive to pursue. So to avoid the double tax issue that you may facing, where the income's already taxed in the country you earned, and then it's going to be taxed again when you repatriate to your home country, let's say Hong Kong. So Cambodia has signed a double tax agreement with the Hong Kong, and it is effective from 1st of January 2020. Under the DTA, the double tax would be avoided, but it also provides some relief on the Cambodia withholding tax on dividends, interest, royalty, and technical fee payments, which reduces from the current tax rate 14% to 10%. So in the following sessions that my team member Ingrid, she will highlight the differences of the DTA between Hong Kong versus China that signed with Cambodia. So in the past, we have also have the tax audit, which has happened when you submit the tax return physically at the tax office. But now we have never seen one in the last 2 years after the taxpayer are required to submit their return online. Limited tax audit is audited on the monthly tax, include the withholding tax, VAT, and the prepayment of tax on profit, etc. But it's not include the annual corporate income tax. So the tax audit period is still subject to another comprehensive tax audit by another team. While comprehensive tax audit is cover all taxes, including annual corporate income tax and monthly tax. So the tax year that's which complete the comprehensive tax audit is considered closed. And it is common that taxpayer would have more than one tax audit case conducted at the same time. And in order to eliminate the tax audit cost for investor, the tax authority set up a gold, silver, and bronze tax compliant classification. There is a checklist that contains 12 criteria to classify the reward class. The highest compliance classification is gold taxpayer, which will be exempt from death and limited tax audit and only subject to comprehensive tax audit in every 2 years. By obtaining this gold certificate, that would definitely help to save admin costs and the time cost to dealing with the tax audits. So a normal procedures of a tax audit would start by receiving a formal letter named the Notice of Tax Audit. The taxpayer have 7 days to provide the request documents. Then the auditor will call for meeting and request further information to issue the tax reassessment notice. And in most cases that taxpayer disagree with the tax reassessment, they could respond in writing within 30 days to object, and you will given a chance to provide sufficient supporting for objections. So our experience that in most tax audit cases, there is a reassessed tax and penalties apply. It is a very rare cases that the case could be closed without any tax reassessment. So in the coming sections, I would like to share some tax audit issues that are commonly challenged that during the tax audit. So it could help you for a better tax planning. The major tax issue would come from the income recognition. The construction services or construction enterprise must record income on any part that they already supply, or the due date of the payment under agreement, or the dates that you have to record it as income according to accounting standard. So these 3 criteria, whichever comes earlier. So in some cases that the construction company claiming that they didn't receive payment based on the contract, but the accounting standard recognized income based on the stage of completion. So it has created a huge tax reassessment during the tax audit. So we advise the client that she seek consultations separately on reviewing the contract payment terms from tax and accounting perspective to avoid such a big discrepancy on the timing of receiving income. And one of the hot issues is about transfer pricing, that's giving the power of the tax authorities to review on related party transactions. Related party transactions by law, it must be conducted at the arm's length. So the major review item we have seen are related to the pricings of purchased material, constructions and management fee. If the auditor noticed that your profit margins is unreasonably lower than other taxpayer in the same industry, they would challenge to review the pricings and deem additional profits during tax audit. So preparing the transfer pricing documentation is actually comply with the law, and it's helped to serve a good supporting during the tax audit. And withholding tax is also a major reassessed tax item for construction industry. The tax auditor will perform review on your rental agreements, related party loan transactions, subcontract services agreements, etc. Generally, tax auditor would perform review if any service payment to a local supplier which are not supported by valid tax invoice would reassess 15% withholding tax. seen construction company obtain loan to pass in overseas at a very low interest rate or even at interest-free. Then tax auditor on the pricing rule to reassess the market's interest rate and calculate the underpay 14% withholding tax on interest. Then the last item here is about tax on salary and tax on fringe benefits tax reassessment. It is quite common that tax auditor will seek to review expatriates' employment contract and challenge on the salary level that's by benchmarking with other multinational company. So they would usually question why the employees is having lower salary package in Cambodia. Is there any additional payment they receive in the overseas bank, or they have received housing and other benefits in Cambodia that would also be subject to the tax on salary and fringe benefits reassessment. If there is no proper reason to justify, then they would also deem the salary for calculating tax purpose. So in the last session, Ingrid will briefly cover the support provided by Hong Kong government for overseas business expansion and as a wrap up.
I think most of you are aware that the China, together with a lot of ASEAN jurisdictions, have entered into the RCEP, which is the Regional Comprehensive Economic Partnership, to facilitate trading between countries. So recently, Hong Kong has been, under the support of the Chinese government, been actively negotiating entering into this partnership. So if successful, Hong Kong corporates would be enjoying a lot of, reduction in non-trade barriers when you do cross-border transactions with countries such as Cambodia. And recently, China and Singapore have completed the ratification of RCEP, and it is expected that Cambodia would complete the ratification in 1st of January 2020. And in addition to this, you may also be aware of the Branding, Upgrading and Domestic Sales Dedicated Fund, termed BUD. In the past, it offers 4 million subsidy for companies in Hong Kong, and now it has been upgraded to 6 million per company. So if you're looking for really investing into Cambodia and other overseas market, do be sure to make use of the support from government. There are a maximum of 60 approved projects for each entity. The matching fund is 1 to 1, so you invest $10, the government gives you $10 subsidies. You would also be receiving 75% of upfront payments, so it really facilitates your cash flow when you invest overseas. So in addition to China and the traditional FTA markets, in fact, Japan and Korea are now recently covered by these FTAs as well. A lot of the activities are approved under this BUD funds. For example, if you're looking to build your brands, you're looking to do sales strategy planning, these are all covered. So as a very last takeaway, based on government statistic, the rejection rate of the application for this fund is around 17%. And all, very common. There are problems with the application, such as lack of information. You are not able to provide details of how you execute the projects. So in other words, this means that if you are able to provide sufficient information for the government to access your application, you can demonstrate how your capabilities would match with the revenue that you're trying to generate from your overseas investment, then you would be able to get the funding from government. So to wrap up, be prepared to leverage on the support from our Hong Kong government and seize the opportunity and let your business take flight. So we will close our presentation here.